Thank you so much, and good morning, everybody. Good morning, panel. I have a bunch of superstars on this stage to help me with this discussion, certainly in this arena. I noticed an embarrassing chuckle from the stage there when I said that. But we'd like to start by welcoming everybody here and acknowledging the Gadigal people of the Eora Nation, who are the traditional owners and custodians of the lands and the waterways upon which we meet today. We pay our respects to elders past, present, and emerging. So team, morning. This is a really interesting subject, and for me, it's obvious that innovation, technology in Australia and the customer base are pretty well connected at the early stage of research and development. That connective tissue is really well mature. It's somewhat later downstream, and that as we enter towards commercialization, that connective tissue gets a little bit less mature. And as our previous speaker so well announced, there is a tremendous pull from industry today. It's challenging our ecosystem as to how we respond to that pace and volume. So my first theme that I'd like to discuss is there a gap between investment and innovation? And if so, how do we close that gap? Rob, I'm going to launch in with you if you don't mind. So is there a gap? And if there is, where might it be the widest?
Thanks, Nick. As you said, there's fantastic research and development in connection with industry in Australia. So we have fantastic research organisations in CSIRO, the universities, CRCs. And then typically in the commercialisation process, people recognise two valleys of death. So the first is taking it from the lab into industry, and then the second is, once it works somewhere, scaling it and getting it out. So the biggest gap is the first one, taking it from the lab into industry. Because probably only 10% of the really good science gets into industry. And some of the reasons why, well, scientists don't want to go and be entrepreneurs for a start. Secondly, miners don't want research projects on their site. And then thirdly, no one really wants to invest in these really high risk startups. So there are a whole range of ways in which they can be laid off, but I'll hand it back to Nick.
Yeah, well, that's a talk all in itself. I think from all industry is having those challenges. Rob is facing those challenges of learning how to make strong and consistent returns on investment from innovation. Even the tier ones, I think, would admit that whilst there have been some successes, there's some challenges too. Maki, I'll hand over to you and say, what are the factors from BHP's perspective that impact that commercialization process?
Yeah, thank you. I think, think about innovation, there's still a process. Innovation is not an inorganized, process. I think people who are successful in innovation follow a process. It's not rigid, but it is a process on how you manage risk, how you need to detect some of the elements of innovation and bringing to commercialization. So some of the gaps, I would say, is more towards the inefficiencies. So very often we see, that we don't connect the right way with some technology. So technologies and companies don't know who they need at what time and at what stage of their maturity. And sometimes it could be data, sometimes it could be just validation of value proposition, and sometimes it's funding. So knowing when you need what and with what partner is very important, and that would really make the process efficient. I think another aspect is bringing more and creating more of the innovation testing grounds. There are some test sites and laboratory, but I think we need a lot more of that to accelerate, idea into actually piloting it somewhere realistic.
I'm going to dive a little bit deeper into that, creating those playgrounds for us to innovate a little bit later, so I'd like to come back to that point. Charles, is there room for small cap innovators in this space? And if there is, how do we make them more successful?
Yeah, I mean, I'm very optimistic about the ability of small METS companies to fulfil the innovation needs the mining industry has. I think there's a lot of interesting and exciting innovation out there. I think the challenge that we tend to see with companies that come to us is coming up with a good technology and a good approach and a good innovation is pretty hard. Building a business is actually just as hard as doing that. And I think people often focus on the first and not so much on the second. One approach that we like to emphasise with the portfolio companies and the people we speak to is to make sure you understand the value that you are creating for mining companies. And that means, and that has a couple of threads to it. The first is being confident about what you have, knowing that you've got something that is going to reduce cost or improve productivity for miners. Also, importantly, knowing how to communicate that to the mining companies, and as Maki was saying, knowing how to sell that to mining companies. Mining companies are, they're complex organisations. It's a complex B2B selling process. You've got to understand all the actors. You've got to approach them the right way. And you really need the industry knowledge to do that. And that's something which smaller companies often don't always have the experience in. I think the good side of this is that previously large mining companies looked to OEMs to provide them with innovation. And there has been some great innovation in that area, driverless trucks and those large capital items. But increasingly large mining companies are comfortable putting critical parts of their infrastructure, of their operations in the hands of smaller companies, so long as they can prove themselves. So I think there is a space there, but you've got to navigate it pretty carefully.
Thanks, Charles. Just bringing some of those points together then, how do we de-risk that commercialization process? Given that our industry is high risk, it's high capital, therefore that drives perhaps a appropriately conservative approach to adopting innovation. But the other side of the coin is there's huge gains to be made. Operational efficiency gains, decarbonization gains, water intensity, power intensity, all of these are prizes yet to be captured. So when you think about that, how to create those playgrounds? How do we create those safe places where innovators and funders can play? So, Rob, that sounds to me like it's a zone for the Series B and C funding, and there's a small number of occasions where the success stories in that. How do we make that arena more attractive to investors?
So picking up on what Charles said earlier, when we talk about the elements that make successful commercialization, we normally say that it's built on 3 pillars. So there's got to be fantastic science. So the fantastic science creates the step change or the reduction in emissions, etc. There's got to be deep industry knowledge. So the deep industry knowledge is the bit on where do I put it in the process? How do I apply it? How do I lay off the risks to get it in industry so that the miners will use it? And then the other structure we typically call business nous. But business nous is a business model that generates return so that you can reinvest, because typically the first prototype or the first bit that's gone out and now been tested, and you've raised your seed round, and that is the hardest round, because deep tech VC, there's one or two there's very few that just focus on that. We do, but very few VC companies will touch deep tech. So that business now also includes governance structures. So it's a bit of a long answer to get to Series B and Series C. At the stage that you're raising money and to be attractive to investors, they need to know that it's worked in the prototypes, that you've got grown-up governance around it, you've got a proper manager, not a kid in the candy store that will run off in different directions, And if you've got all of those elements and you've started scoring goals and you've got a business model that will make money, then you can attract money into the Series B and Series C.
So, of all the stakeholders playing in this arena, one could argue that Tier 1s, globally diversifieds, have some of the deepest pockets, maybe access to some of the most patient capital to play in this arena. Is there an appetite, Maki, amongst your colleagues to create some of those playgrounds for us to be able to innovate within?
Yeah, definitely. And I think, as I mentioned earlier, there is a process for innovation, and there's also a process at BHP and as in many companies to de-risk technology. So how we invest is also, connected to the risk appetite and also the risk. But some of the things, as you heard, Rob, there are many components to be a successful business in mining and having a successful technology turn into a business. And not all technologies have that. So we are really open to helping those technologies. And one of the things we do at very early stage at BHP Think and Act Differently is to create kind of a platform of collaboration where companies can come to us to validate their hypothesis, get feedback from experts, have small funding to test aspects of the technology. And that's the early stage, playground that we've created. And it's working very well because collaborators and technologies learn from each other. And they can fail several times in that stage. It's not, large capital. It's, testing small things as well as testing a lot of the understanding of use cases, applicability, as well as some of the hypotheses. So that's one. And then as technologies mature, we engage more actively. But that's not always just, with BHP only. We've had also very good successes through consortiums and JVs. So that's where you don't just hear from one company, and it's very valuable for technologies to hear from multiple players in the mining sector. And that together, we create also that more solid value proposition, if you say, for technology. So that's another, aspect of the playground when it's a little more mature. And then one thing we shouldn't forget is bring back the lessons learned and the successes back to the ecosystem, because that's how you accelerate that commercialization. What have we learned from other companies that's not working or that has worked tremendously well, and bringing that back to the ecosystem is very important.
That's really encouraging to hear. And I think, Rob, you touched on some practical aspects, and it sounds like, Maki, you're talking about the same arena. And if these agile kind of playgrounds can be developed, let's talk about the risk of failure, an ugly subject. But in the commercial models that how investors look at this arena, can the risk of failure be accommodated in one of those models?
So we're a private equity fund, so we think about failure of our portfolio companies all the time, I must say, and about what can go right and what can go wrong. I think from a commercial perspective, I suppose when you think about failure, there's a couple of elements to it. And one is a failure that the company doesn't deliver the value that it ought to be creating to mining companies, which is obviously the fundamental problem which everybody would wish to avoid. And I think one of the important elements of that model is to actually get people, get the companies, get the innovators out there talking to the mining companies, the innovation parts of the mining companies, but probably equally as importantly, actually to the operations. I think a lot of people talk to the innovation parts, that's great, but you really want to talk to the actual operations because they generally hold the budget. They're often pretty happy to see you, and they're also, they'll tell you what the problems are in a pretty unvarnished manner. So I think that, to overcome that risk of failure, talk to the customer, understand the customer well. I mean, there's all sorts of financial models, private equity investing, the stuff that RFC, Ambrian do, that we do. I think, that there's finance out there available for the good opportunities. I think for those sorts of opportunities, the companies have to be of a particular type, which can grow rapidly. And there's also a whole lot of other companies which are innovators, which maybe can't grow rapidly, but could equally provide value. But I think the commercial models are reasonably well established for there to be the opportunity for success and failure. And if you're dealing with business, sometimes you succeed, sometimes you don't. And the final element, I suppose, is an experienced management team who may have done this before or may have been successful in other industries, who can help navigate all the challenges, because inevitably there are significant challenges in getting something innovative and new in market. Nothing ever goes smoothly. There's always problems. So having an experienced, a seasoned management team will help you manage that risk.
Any more insights, Charles, into, you said, innovation of a particular type? Any more insight into that?
Look, the particular approach, and again, I don't want to so much talk our book, but I think what we have found have been successful innovations have been where you've been able to establish a very clear value proposition. So that's tended to be actually in mining operations more than other areas. And the reason for that is because mining companies spend billions of dollars every year, blowing stuff up, moving it, processing it, refining it. That's a very, very lucrative market. That money will always be spent. So I think that we find that those types of innovations where you can clearly demonstrate a benefit in an industrial process is a really good place to start. I think some of the areas which we've found trickier, and I'm not saying there isn't value there, is things like exploration, because the budgets move around a lot. It's hard to build a business in those areas. And the other area that we've found tricky has been processing, because the cost of coming up with a new processing technology, the timelines required, and the cost to develop something to work at industrial scale are just, your timelines are long, capital requirements are very high. It makes it tough. But I think coming up with new particular points of value in an existing industrial process, which is what most of mining is, there's a lot of rich opportunity there. And a lot of that is being delivered now, and the mining companies are always interested in something which may only do a 2 or 3% improvement in productivity, but could be worth millions. So I think that's a very, very rich field.
Got something to add, Rob?
I would just add that when you introduce new technology and you're thinking of failure, if it fails because there's something fundamentally wrong with the technology, that's fine. When it fails for reasons that you should be able to influence or control, that's a very sad outcome. And one of the things that we've noticed, and it probably goes back to me being bullfed engineer and not being very good with people skills, is that people are very reluctant to change processes or what they do every day. So I won't go into specifics, but a hugely impactful technology. But suddenly it's throwing a spotlight on a geologist's reconciliation model that he has had for years, and it's now no longer correct. It's showing that the met balance that the plant guy has controlled for a long period of time, because there's now for the first time very good data points coming in, it's not correct. It's very, very confronting for people. And cultural change, I'm rapidly learning, and people, and bringing them along for the ride and understanding what's happening is critically important for successful implementation, even if the technology is incredibly powerful.
That just happens to be a great segue to the final theme. That wasn't managed. How do we establish that trust in the ecosystem? Often those unwanted failures on good tech come from stakeholders being misaligned. So, getting alignment on what good looks like from the outset is absolutely critical. And obviously stakeholders investors, innovators, owners, operators, engineers can come to that arena with very different ideas about what good looks like at the end of the day. And if you don't align from day one, that misalignment can cause unfortunate economic or commercial turbulence down the line, or at worst, failure. So, thinking about that alignment, Maki, I want to start with you. How early should we be creating that alignment with teams, and what's the impact of doing nothing in that arena?
Yeah, so definitely as soon as possible, because the earlier you fail, the less impact you have. You all know kind of the impact and risk graphs, but as early as possible. But you don't necessarily have to have it right at the very early stage. But for the likes of BHP, there is a balance of being prescriptive and being open to new ideas. I think in the past, there might be a lot of prescriptive, we need this exactly. But we're more and more of, hey, there is a certain problem where we have no clue how to solve, and we're open to any, kind of solution spaces that exist. And I think that create an initial alignment where we don't necessarily know, but we put the challenge out there. So then we align potential solutions with that. And therefore, the technologists and the innovators have the time to think about, how to solve that issue. So I think that there's an alignment, initial alignment of what problem we're trying to solve, and then leave it open for the solution space to do that. And then later on also, I think what Rob was saying, when we're thinking about big problems and smaller specific problems, and to your point, Charles, I think it's easier to solve specific operational issues, but we also need to think about how we're gonna double the copper supply, and those are big problems. And I think having clarity around these are big issues we need to solve. However, they are values that can be brought in at certain moments, and it's earlier, and they have operational impact. I think tying that shorter term value into the broader picture is very important, because yes, a combination of smaller values will help, but will they be able to make that big change in how we mine to double the copper for the next decade? That's not sure, right? So we also need to have that in mind, because that's a key challenge for the industry.
Yeah, all that whilst decarbonizing and reducing water intensity, and all at the same time. It's a monumental challenge, as our previous speaker spoke so eloquently about. Charles, whilst capital is not the only ingredient, clearly nothing material happens without it. How do we go about as an industry attracting more patient capital into this arena?
As a capital provider, of course, I think capital is pretty important, but I would say there's actually plenty of capital available, really. Countries are awash with capital. I would argue that it's sort of the right sort of capital. And so being able to invest with or to support companies in the right way and add the right expertise is very important. I think that one thing that constantly surprises me, and we've heard this all through the conference, is the reputation of mining, and people don't understand how important it is to the country, in fact, into the global requirements for decarbonisation. You're constantly surprised about it. What constantly surprises me is how advanced, effective, capable the met sector is in the Australian economy, the value it creates here and overseas, and virtually no one knows about it. And it's sort of like we used to have these silly debates about the car industry and should we have one. It's export-orientated industry, it employs more people, it's more effective, it's got more technical capability, and hardly anybody knows about it. So I thought one of the things we could actually do is to talk more about the extraordinary suppliers and the extraordinary capability, technical management capability that has built an incredible industrial sector within Australia that is export-orientated and world-leading, and you just wouldn't know about it. So I think that more visibility about the opportunities that exist here would actually be a great way to probably attracting more capital and growing the companies more quickly. But I go back to my first point, it's not just about the capital, it's got to be the right sort that can help the companies grow.
Thanks, Charles. Rob, in the interest of time, I think I'll probably give you the last word on this, and I'll end on collaboration. How do we collaborate as stakeholders better to make this whole arena a lot more attractive and a lot more aligned?
So over recent years, when you go to conferences, there's lots of talk about collaboration. And I've sat on this stage with large mining companies and we've had collaboration agreements. The dirty little secret that's not shared often is that when you enter into these collaborations, often people will try and put their foot on your IP. Now that hardly ever happens now. And then the other dirty little secret is that there are confidentiality agreements that absolutely stitch you up. So one of the easiest ways to change things quickly and help accelerate things would be to be more open about the collaborations that we have. To pick up on Maki's point earlier, if we are open about what we're doing and we are able to publish white papers and share what we're doing, it makes a massive difference. Then the other, to pick up on a comment that was made earlier, from senior mining companies, particularly in Australia, we are, as Charles said, world leaders in METS. If I look at Chrysos Corporation, the company that we started, disruptive assay company, early on, leadership shown by a few large gold companies was hugely helpful to us. So Goldfields, for example, did a very extensive testing program, and then a senior executive stood up at a conference and said, if you don't use Chrysos' photon assay, you're a bloody idiot. He said it at several conferences. A short, not very long later, Barrick had done a very extensive testing program, came out publicly when we first installed the first unit in Tanzania and said, this is a great technology. And 2 days ago, Barrick has said that they have been vocal about saying that they are rolling out Chrysos to all their gold operations globally. Hugely helpful. So to a point made earlier, mining industry leaders will help Australia's world-leading MEX sector if they show leadership. Saying things like fast followers is not helpful. Back to you, Nick.
Rob, applause from the audience. That's the first. I wish you'd revealed those dirty little secrets a bit earlier. We could have dived into it. But thank you to my panel. I'm now more convinced than ever that we can close the gaps. But in the interest of time, I just want you to join me in thanking the panel.